TJ the Wheel Deal coming at you live. It is Monday, December the 30th, 10:20 a.m. Central Time, Texas time, as I like to say. Guys, I got about 20 to 30 minutes max, so I'm going to try to be as succinct as I can because I got stuff to do. We're dealing with some stuff as a family. I'm going out of town. I haven't seen my son in a few months, so we're going to go spend the new year over there. Got to come back. We have a funeral that we have to attend on Thursday, so we're running around, and I got like 7 or 8 FaceTimes to knock out today as well. Anyway, so I apologize. I'm not going to be able to get to a lot of the chats or any of that stuff today. I apologize. You guys mean the world to me. Thanks for tuning in. I will read the chats afterwards. We're going to get into it, guys. The market is bleeding out. A lot of people freak out during these types of situations, and this is when I shine because I'm generally pretty cool, calm, and collected. So I am generally the voice of reason because I have a 3 to 5 year outlook always in the marketplace, and today is no different. 3 to 5 years from now, we're not gonna know what happened today, why the Santa rally happened or didn't happen, and we're not going to give a shit. That's just the way the life is. So I always look at that. I'm like, 5 years from now, am I going to be thinking about today? The answer is usually no. So I'm like, well, I'm not going to get too high and I'm not going to get too low. So I'm just not going to do it. So let's get into it, guys. Real quick portfolio update. There has been some shopping, some Christmas shopping. The best time to shop is not Black Friday, it's after Christmas. So in my family, because we grew up with not a lot of money, we celebrated Christmas a lot, December the 26th to the 31st. You know what I mean? That was the time that you could go get the sales in, for the holiday season. So let's get into it, guys. Portfolio bleeding out a little bit. We're down a house in some parts of the country. So let's talk about it. The portfolio is pretty healthy, though, over $4 million in cash. The margin total is $6 million using 5.2 in collateral. So technically using about 1.2, 1.3 in margin to sell options because everything else could be covered with the cash in the account. If everything were to expire in the money, we can cover most of it except $1 million. So we're going to go through some of the positions and see whether or not the portfolio is healthy or whether or not we're in a situation where we're like, oh shit, there could be some oh shit moments. We'll see. Appreciate the 200 people that have clicked the link on X and the 60 people rocking with me live. I know that our beloved Amit is live on YouTube. I apologize. I don't like to go live when he's live, but at the same time, I got to do my thing, right? Have an obligation to our audience, to our members, to let y'all know what's going on. I've been doing my best, giving y'all the plays on X and stuff like that. And there's also a saying in the industry, you got to find your own audience. So I feel like I'm going to find my audience as well. So let's get rocking and rolling with this thing. So I'm going to start with the positions, guys. Some of these positions have grown. So I've got these on equity. SoFi's at 150,000 shares. Tesla's at 4,000 shares. Riot is now at 150,000 shares. It was at 125 not too long ago. So I bought some shares today. Amazon is at 6,000 shares now. It was at 5,500 shares. PayPal's at 10,000. Hood's at 10,000. CleanSpark is now at 15,000. It used to be at 10,000. And Marathon is now at 7,500. It used to be at 5,000. So I have done some shopping. So let's start with the position that I'm probably the most excited about, and that is Riot. Why am I excited about Riot? Because I feel like the floor is like right here, probably like in that $7 or $8 range. And that's not a lot of volatility in my mind because I'm pretty used to this thing. But I feel like the sky is kind of the limit for Riot. I think if they keep figuring it out fundamentally, they keep, just knocking the cover off the ball, shoring things up. The balance sheet's good. They did the convertible thing. They bought the Bitcoin, all that stuff. They get to like 50 exahash here in the next year or so. They formulate a legitimate game plan to get to 100 exahash in the next 3 to 5 years or however long it takes them. I think they'll probably be best in class or right there because right now they're like a top 3 miner, and I think they'll stay there. Maybe even get to the top. We'll see because it's like Marathon Riot and CleanSpark, right? And not necessarily in that order. Depends on what metrics you look at. And then Core Scientific's kind of doing its thing, but it's also ventured off into the HPC world and whatnot. So I'm just super, super excited about Riot. They got an awesome balance sheet. I feel like they're not overextended with the convertible note. And I want to be a big, big player in this space as far as a retail investor with Riot. So I'm trying to grow the portfolio accordingly with Riot. I want to grow the position with it. And we're not done, guys. We're looking at 250,000 shares with Riot. That's the allocation that we're looking for personally in this particular portfolio. Under my custody, if you will, I want to get up to probably in the 2 million share range. Like I want to be able to control 2 million shares of Riot through the family fund, the hedge fund, and friends and family that I just kind of like help, quote unquote, not financial advice. Like I want to be able to control about 2 million of these bad boys. So what's going on here with the position? We've averaged up to $8.51 on 150,000 shares. I feel really, really good about those. I think that these shares could hit 25 bucks by the end of 2025 pretty easily. Maybe more. I mean, there's a world where this thing could probably go to $30 or $40, but we'll see. But how are we looking? How are we playing this game? So we've got $420,000 in cash secure put collateral. So what does that mean? A cash secure put, that's an obligation to buy shares at a certain price on a certain day. We've got an obligation to buy 20,000 more shares at 10 bucks and an additional 20,000 shares at 11 bucks. I can tell y'all right now, zero interest in picking up more shares at $11 because I just picked some up in the 10s. So I'll be rolling these here pretty soon, probably towards the end of the week, if not early next week at the 11s. The 10s, well, those are good. Those are out of the money. So that's what I'm looking to do here is I'm just cash trapping here. So that just means that I'm just collecting as much premium as I can, trying to pad the bottom line, but I don't want to take assignment on this $420,000 worth of collateral. But then now I've got the shares for sale at 20 bucks for January of 2026. So why am I so aggressive on the covered calls if I think that Riot could go to the moon? Because that's what I think. That's not what I know. I don't have a crystal ball. I can't see into the future. So I have to do the right thing and bring some premiums through the door. And that's why I put all the shares up for sale at 20 bucks. But then I also used that money to finance some long calls. So I bought some insurance and I bought 200 contracts at 15. So even if these get in trouble, I'm not going to allow them to stress me out because then that just means that these $15 long calls would print. So I feel like I've got a pretty strong stranglehold on Riot, but the overall position is absolutely bullish. I'm not buying any puts or anything of the sort. I am simply playing this thing up and to the right. That's just the way that I'm playing it because that's where I feel that it's going. Do I think that it can come crashing down to $6 or $7? Not really. I think the floor is like 8. Can it happen? Yes. Can it go to $5? Anything's possible, guys. Anything's possible. I don't control pricing in the market. Neither do you. Neither does Warren Buffett. We only control our positioning in the market. Let me say that again for the people in the back of the class. We don't control pricing in the market. We only control positioning. This is my positioning with Riot in the market, and I feel like we are positioned to win. Why? We got an adjusted cost basis. Well, now it changed because it was in the $2 range. So let's look at that. Let's go over here to Riot and let's go look at the trusty, rusty wheel tracker. And let's see. Let me know if you guys can hear me because this thing's saying that I've lost something here. Let me know if you guys can hear me. Give me a thumbs up if you can hear me because this thing is saying that you guys can't hear me right now. So let me know. And wow, we got a lot more people tuned in. Did Amit come off? Is Amit no longer live or something? We've got 620 people now. Okay, volume is low. Let me crank that up a little bit. Let me know if that helps. Okay, thank you. Appreciate you guys. So we got 128 people on YouTube and we've got 635 people on X. So let me see if I can make this a little bit bigger. That's what she said. Yeah, this thing is pretty pretty, there we go. Okay, so what do we got here on Riot, guys? We've got 150,000 shares, current price 1019. According to this thing, might be a little bit down, a little bit behind. The cost basis is 906. Adjusted cost basis is $3.46. I know that Robinhood says it's like 854. So there's a discrepancy there. But this thing knows how to add, guys. And if you add all of the shares that we have bought, we have paid $9.06 for it. But Robinhood somehow, I don't know how they do their math anymore. Maybe I would love to be able to talk to somebody in customer support, but they say that we own these shares for less now. So I don't know if they take money from cash secured puts or covered calls and then now call that your average cost. I don't know. But our cost basis, which is what we call our average cost, is 906. It looks a little bit better on Robinhood, but adjusted cost basis. This one's taking into account all the cash secured put premium, all the covered call premium, and even taking into account all the premium that I paid via the long calls. So we're at 346. So I feel like we've still, for all intents and purposes, we've manufactured the win here on Riot. So I think that we are going to be okay. So Chris is saying that y'all can't hear me now. So I'm not sure what's going on there, guys. Not sure what's going on there. Give me a thumbs up if you guys can hear me. Anyway, you can or you cannot. So, I got you. Anyway, so that's what's going on with Riot. So I got to keep this one going, guys, because I don't have a lot of time. I apologize. I do not have a lot of time. So that's what's going on with Riot. Hopefully that covered, everything that we need there. And I'm going to get to MSTX. I know there's a lot of people in MSTX. I'm going to get to it. I'm going to leave you all hanging on that one. The other one that I added to is CleanSpark. Why? Because I've been studying some more CleanSpark, guys. I've been listening to some interviews with a Schultz character from CleanSpark. I want to say his name might be Matthew Schultz. And then Zach Bradford, I think, is the CEO of CleanSpark. He tells you how little due diligence I've done on CleanSpark, because I don't spit out these names the way I do Jason Less and whatnot over there at Riot, because I'm more excited about Riot. That's the bottom line. But that being said, CleanSpark is a very efficient miner. And they are also a 100% pure play miner. What does that mean? This company mines Bitcoin. They have a very efficient fleet. They have over 20 locations or data centers, whatever they call them, so that they don't have the concentration risk, if you will, which I don't really think is a concentration risk that Riot has, because Riot has, Corsicana and Rockdale. So I'm just giving you all the reasons that I do feel that CleanSpark is kind of a compelling play in the space, is because they are a pure play Bitcoin miner. They got $650 million, and they're like, hey, we're going to shore up our balance sheet. We're going to make a bet on us. Let me just talk to y'all for a second. We are going to make a bet on us. We're not going to go fucking buy Bitcoin at $105,000 because we can go mine it for $40,000. So we can make a bigger spread there. So it doesn't make any sense to go buy it at market. And on the surface, I agree with that philosophy and with that ideology. Just straight up, I agree with it. However, I also think that a hybrid approach is probably the best approach, and that is still why I like Riot, because Riot is like, hey, we're willing to do all of it. We're willing to, if the HPC play comes at us and it makes dollars and cents, we'll look at it and we would probably do that. We're flexible. The right situation with the convertibles presented itself, and we just buy Bitcoin to increase our HODL because ultimately we think Bitcoin's going up and to the right. We'll do that too. And we're also a pretty efficient miner in our own right. And we do have a pretty big spread, mining in that $40,000 range. So we'll do that too. So we're not going to limit ourselves to just one stream of income. So that is why Riot has always been very compelling to me, because it seemed like they were always really flexible with their HODL as well. Sometimes they would keep the coins, the tokens that they were receiving for doing, you know, the ledger stuff, however Bitcoin mining works, because it's really like intricate and technical. And sometimes they would sell it. Sometimes they would do a combination. So I always liked their flexibility. I always liked how malleable Riot was. And I feel like CleanSpark over here, on the other hand, is being a little bit rigid. But I do like the pure play. I like that they're betting on themselves. And I've never really shit on them. I made a joke whenever Jason was on about the fucking jet, the private jet. But from a business perspective, it probably makes sense because they're probably able to write it off. You know, it's called financial engineering in the business world. And it probably makes them very efficient because if they have a lot of locations and whatnot, they can probably get all of the right people together in one spot a lot more efficiently if you can put everybody on the fucking jet and go from A to B and B to C and so on and so forth. So I get all of those things. Now, as far as share-based compensation, dilution, and all that stuff, I do not know because I am not as familiar. I don't know because I'm not as familiar. We've had Jason Less on the channel. Shout out to Jason for coming on the channel. I'm hoping that he'll come on again here at some point. We want to keep growing the audience for it, so it could be enticing for him to come onto the channel, because the more people he gets to speak to and get their message across, the more incentivized they are to do so, right? So that being said, I don't know how it works for CleanSpark. What I do know is that they can mine a Bitcoin for like 36 to 40,000 bucks. We know where Bitcoin's trading, so I can see theoretically how they can make money. And they've entered into this cap call. So if you study the convertible note and you put your biases aside, you put your private jet, you know, freaking angry about that aside, whether you think Zach's getting paid too much money, you put all that shit aside. You put all of that shit aside and you just look at the numbers and you look at the fact that they can no longer dilute, or they've said they will no longer dilute until it's something like 24 or 25 bucks a share. That makes you feel pretty excited as a shareholder because you feel like we're aligned. We're on the same team. We have Jason on the channel and he's like, hey, all of these stock-based, you know, the compensation plan, the awards that we get, it's all based on essentially beating the Russell 3000, right? Like they have to do well in comparison to that index. So it's not like they're just going to get a golden parachute and the fucking stock's going to tank and they're going to keep diluting us. It's just not how it works. Like we're in this thing together. So it gives us a sense of comfort that our goals are aligned. So anyway, that's what's going on with that. So I think that there is a bit of an asymmetrical risk, a bet on CleanSpark right now, because I feel like they've done what Riot did a long time ago, got their shit together on the balance sheet. Like they're just like, CleanSpark is kind of late to the party. You know what I mean? Like I think that Jason and the team, they just had a lot more foresight and they're like, hey, we can't do anything without being like financially stable in this space. So we're going to make sure that our money is right. They're like pulling a SoFi, get your money right. So Riot was playing a game called Get Our Money Right, so that when the right opportunity presents itself, we can pounce, we can go expand while everybody else is running for cover. And I feel like now CleanSpark's kind of trying to do that. And they front run that a little bit because they've got a lot of miners on the books. They've got a lot of land on the books, infrastructure on the books, if you will. So I feel like they have the ability to expand. They have a clear-cut path to get to 50 exahash as well. And the more exahash that you have, the more ability you have to do all these computations, and you have the chances become higher of receiving these Satoshis or Bitcoins or whatever the hell you want to call them. So that is why I'm kind of excited about CleanSpark. But make no mistake about it, my excitement on Riot's like at a 10. CleanSpark and Marathon's like at a 5 or 6. Why? Because I just don't understand them as much, because I don't want to spend the time to do so. Why? I'm just not interested. There's only so many times in the day. And then I've already met the people at Riot, man. I saw the gleam in their eye. They had like that eye of the tiger, the Rocky. It's like Jason said, they need this thing to work. But as an investor, I have an obligation to my family, to our investors, to our clients, throw the fund, to be a little bit diversified in the space. And I think that the 3 best bets out there are Riot, Marathon, and Clean Spark. Like, if I can only pick three, those would be the three. Some are going to argue iron and all this other stuff, and that's cool. I think that those are going to be fine too, but the ones that I'm most interested in, the ones that I know most about, are going to be those three: Riot, Clean Spark, Marathon. I think it's a 3-horse race. I think that it's kind of always been a 3-horse race, and I think that that's the way it's going to be. I think that it's going to be winner take most, and those are going to be the three. Clean Spark, or I'm sorry, Core Scientific would have definitely been one of those, but they already made the decision to do the HPC thing, so they're not going to be as big on the mining side of things. Well, how do I feel about the miners for the next 2 to 3 months or whatever? I think it's going to be a rough go for probably the next, I don't know, month or so, maybe. Hopefully not that long. I think that there will be a lot of people that get shaken out, and then I think things are going to go up and to the right. So you're going to have to earn this win. You're going to have to earn this win. I've already made a shitload of money off the miners. Everybody that's been rocking with me has made a shitload of money off the miners, but we've had to earn the win. We've had to earn the win. Let me talk y'all through this Clean Spark real quickly, because I got to run real quickly. So we're sitting on 15,000 shares at 10.05. That's what's going on there. Losing a little bit of money there, down a little bit of money. Got the shares for sale at 12.50. Only 100 contracts. So at 10,000 shares for sale at 12.50. The other 5,000 shares, I haven't put them up for sale yet because I just bought them. And then I've got an agreement to buy 40,000 more shares at $8. I've considered selling more contracts at $8. Pretty even on those contracts there. So I'd have to be down like 20% for it to become compelling to do so. So that's what's going on with Clean Spark. The other one is Marathon. Getting our asses kicked on Marathon. So 7,500 shares at 22.50, so down substantially on the shares, 39 grand or so, with an agreement to buy 420,000 more, $420,000 more at 21 bucks. So 20,000 shares at 21 equals 420 grand at 21. So I'll probably be looking to roll that down to 20, and then 19. Then maybe take an ownership in that $18 range. We'll see what happens. Or if things start moving up, I'll look to just take ownership right there and try to ride them back up. And I've got shares for sale at 25, not all of them, because I just bought these shares. So I bought 2,500 shares at 17. You'll see them right here. Now on Clean Spark, I didn't show you all those. But on Clean Spark, I bought 5,000 shares in the $9 and something range, whatever it was. Yeah, $9.25. 5,000 shares at $9.25. So this is all that's gone on with Clean Spark, and then with the Riot. With the Riot, bought 5,000 shares at 50 at 10.13. So spent 50,000. And then I'll tell you all what happened. I looked at the cash balance, and it was like 4.2, and then it said 666 point something. And I said, oh, hell no. Oh, hell no. Not going to have that. So I immediately turned around and bought 20,000 more shares of Riot. That's literally what happened. And that's why I bought the 20,000 shares of more Riot after that, because I didn't want that cash balance to have 666 on it. So I was like, no, I rebuked that in the name of the Lord Jesus Christ, fuck you, Satan, that kind of thing. Like, that's how it happened, guys. So I was like, I'm buying 20,000 more shares of Riot, and I want that cash balance to not have a 666 in it. And bought the 20,000 shares more at $10.21. And that brought our average, according to Robinhood, at 851, even though our wheel tracker says 906. So it is what it is, It is what it is, and it ain't what it ain't. Now let's talk about the elephant in the room. We've got a real big position over here for the end of next month at 65 bucks, and that would be MSTX. So I've got an agreement to buy 30,000 shares of MSTX at 65 bucks with the break even of 55. So what does that mean? That means that I collected about $10 in premiums. So you go 65, you collected 10, that brings you to 55. So the opportune time to roll a cash secured put that is in the money, if you want to roll down for a credit, would be right now, because I'm at the break even or a little bit below it in this case. Why am I not looking to roll right now? Good question. Glad you asked. Let me answer it. So let me show you all the actual trades right here. So we got the 200 grand on the 200 contracts, got 44 grand, got 57 grand. So that's how it all worked out. So that's the average of 1006 or whatever. So why am I not looking to roll right now? Because I think that there's some tax loss harvesting going on. And I am going to make a bet that this thing is going to bounce here in the next few days. So I don't want to kick the can down the road prematurely. So the counter argument is like, why don't you just kick the can down the road and you can always roll it back in? It's not that easy. Whenever you kick the can down the road, you're eating a lot of that extrinsic value. You're paying for a lot of that time value. And then it's hard to collect it on the back end. So if I kick this can down the road and then MSTX goes back up to like say 62 or 63 bucks and I try to roll it back in, you're going to find that the money that I collected for rolling will be less than the money that I have to pay to reel it back in. So now I'm stuck in this trade potentially longer than I wanted. So I'm going to let it play out, because if I wake up tomorrow and all of these shares get put on me, I'm going to sell covered calls. That's it. It would be that simple. And I would sell covered calls where? At 65 bucks. That's it. I already decided that. So I'm not going to freak out. Now, if it dips down to like 50 tomorrow, then I might have to change the radio station and sing a different song, because then the risk of early assignment becomes a little bit higher. Is it likely? Not really. Not really. But it's not an assignment risk that I'm defending against. It is about lowering my risk and collecting a credit to do so. So if you want to roll down and out for a credit, the opportune time to do so would be right here, right now. But that being said, you have to be willing to want to extend the contracts. There's two things that you can throw at a contract. And then the third one is abstract. You can throw time and you can throw capital. The other thing you got to throw in there is conviction. So I got the conviction. That one's easy. Time, that's the one that I'm being a little sketchy on. I don't want to be in this trade any longer than I have to. That makes sense. Why? Because the miners are giving me a play and I'm a lot more comfortable over there. Like, I kind of wish I wasn't even in this play right now, truth be told, because then I'd be like, fuck it. I would just be at 200,000 shares of Riot and call life a day. Or I would maybe be exploring some options with BITX, because I'm a lot more comfortable over there too. And they pay a nice fat dividend as well. But it is what it is. I feel like I overstayed my welcome on my MSTX, because I had made a real quick 72,000, and I'm like, oh, the getting's good. Let me go grab another 300, and now here we are, right? That's how it worked out. That's the reality. That's the type of transparency you're only going to get on this channel. So what am I looking to do? I'm going to roll right until I'm right, and until I can set it up accordingly via the 25, 25, 50 strategy. So what does that mean? I'll look to take 25% of the ownership in that $50 to $60 range. I'll look to take 25% of the ownership in that 45 to 50 range. And then the bulk of the shares, I'll look to get them in the low 40s, high 30s. So I'm going to pick and choose where I take ownership. So I may not roll all 300 contracts. I may keep 50 and roll 250 and be okay with assignment at 65 on 5,000 shares, roll the other 25,000 shares or 250 contracts, roll those down a month or two if I need to, go from a 65 to 55, and then I'll turn around and sell covered calls on the ones that I got assigned at 65, right at 65, and then I'll formulate a version of the covered strangle. So there are things that I am looking to do with this position. But make no mistake about it, I'm not looking to throw any more money at it. I'm just looking to see how I can divide the money that has already been allocated to it. So I'm looking at the 25, 25, 50 strategy. I'm looking at, okay, it is, let's just do the math. Well, I don't have to do the math. It should tell me right here. It should tell me how much, does it? Let me see. It should. I feel like it should. Here we go. So there's 1.950 in collateral. Be cool if I could show you all that. Okay. So there's 1.950 in collateral. That's $6,500 times 300. That adds up to 1.950. So I look at it, okay, 25, 25, 50. So 25% of 2 million bucks is going to be what? About 500 grand? So yeah, about 5,000 shares or so, give or take. I'd probably be comfortable just taking an assignment right here. You know, I'd have to like study the MicroStrategy story a little bit more and all that stuff. And see, this is again where I don't study the charts as much. I study the story, I study the fundamentals. Like, what the hell is really going on with this thing? And if I truly believe, which I kind of do, then I'll just rock with it. I'll take ownership over here of 5,000 shares, kick the can down the road a month, 2 or 3 if I have to get it to a comfortable allocation for the second bullet. So if I take ownership at 65 on a lot of these, you know, on let's say 50 of these, then I would try to roll the entire lot a month or two, and I try to go from 65 to say 50, something like that, maybe even 45. And then I let that play out. And then I'd probably be okay taking assignment on 50 more contracts down there. And then I would save the 200, the real big bullet, and I'd kick that can down the road when the time came, another month or 2 or 3 if necessary, and I would roll it in that $40 range and take assignment over there so that I could have the lowest average possible. Why is that important? Because when it comes time to selling covered calls, it gives me the chance to be able to sell covered calls and still collect some pretty decent premiums along the way. Now, let's just fast forward like 3 to 6 months, this all plays out. I have ownership of all of these shares. It was still a 1.950 investment, or it was less actually, because when you roll down and out, you're taking some money off the table, right? You're releasing collateral. So let's say I end up putting in like 1.6, 1.7 into this position. I'm not going to get greedy. I'm just going to sell covered calls right at whatever my average assignment price is. And I'm going to do that over and over and over again. And then I'm going to let probably half of the position get called away so that I could legit get back into cash. And then I would turn around and I would sell cash secured puts at much lower levels with that money. And then I would try to ride some shares back up. One of the cardinal sins that I used to make in the past is that, like, if all these shares cause me pain, I'm going to make sure that they give me the pleasure on the way back up. And that's kind of like a form of revenge trading. And I don't do that anymore. Like, I'm like, dude, if I go all the way down, I made the premiums. And then if I sell the covered calls and I get back to my break-even point and I made premiums on the covered calls as well, I didn't lose any money on the shares. That's a win whenever a position legitimately goes against you, the way that this one is kind of going against me right now. But guys, truth be told, this one's not going against me that much yet. If it was trading in like the $30 range, that would be a little bit different. Now we're talking about, oh shit, you know, maybe we got to lock in a loss, let the dust settle, wait 30 days, get back in the $20 range or something like that. But that's not what we're talking about here yet. So we'll see what happens. You know, everybody's going to have an idea. Everybody's going to have if A happens, B happens, C happens, and all that stuff. I don't play that game. That creates a bunch of fucking anxiety. I deal with the here and now. Right now, we're dealing with a stock, a leveraged ETF, that is trading at $53.61. That is the reality. It is down 16% on the day. That is the reality. The chart's going to say one thing. You're going to say something else. CNBC could potentially say something else. I don't give a shit about any of that stuff. What's real to me is that is what is real. Tomorrow it's going to be trading somewhere else, and that's going to be real, and I will address it then. But today, I'm definitely not going to be pushing any buttons. Very unlikely that I'll be doing anything tomorrow because we're traveling to San Antonio. And then I have, obviously, the market will be open tomorrow from my understanding. So I'll be not looking to do any trades because I don't have the laptop or anything. So I'm not trying to create like any work when I come back, because on Thursday morning, we're going to be driving back and going to have that funeral to attend to as well. So there's that. So that essentially is everything that's going on with the portfolio in a nutshell. And then I brought in another one. This is the last one. I got to go. Enphase. I sold cash secure puts at $69. And Enphase is already approaching $69. The beautiful thing about it is it's only 25 contracts. So relatively speaking, it's a pretty small position. And I really don't give a shit about it. It's Enphase. They're not going to go out of business. Anything of the sort. I think we're going to be okay. AJ MSTX, I just talked about it for like 15 minutes. So just rewind the tape. I think we're good. Anyway, guys, I got to get rocking and rolling. I appreciate each and every one of you guys, but I do got to go. We had a really, really good turnout here, 1,282. Click the link on X. We had 170 people rocking with me live on YouTube, and that's because the Mitt was on. So that was pretty damn awesome, guys. I appreciate you guys showing up and showing out. One last thing, piece of laundry. Guys, I'm closing the membership. We hit 300. I appreciate you guys. There's only so much time during the day, so there's only so many FaceTimes that I can do. If I ever open the membership up again, it would be because I restructured things, and maybe we're doing like more group FaceTimes and stuff, and I would only do one-on-ones with the $25 members and above. Like I would no longer do one-on-ones with the $10 members. But the $10 members it's only once every 3 months. So it doesn't really take up that much of my time. So I'm okay doing it. But if it becomes too much, if I'm able to do like a little restructuring, then maybe I can open up the membership again, but only strictly at the $10 level. Like I don't think that I would ever take anybody on ever at the 25 and the $100 level. So if you're locked in there, you're locked in. If there's a way for you to upgrade, if you're at the 10 and you want to upgrade, you can lock that in because you're already somehow in that system. But we're not going to be taking any more. That's it. I'm going to give you guys my heart and my soul, everything that I can give you guys to make y'all the best possible wheelers, so that nobody can go out there and talk shit about me, right? Because my name's important to me. So whenever I'm talking to you, I'm going to be focused as best I can. But keep in mind, during these FaceTimes, I'm doing live, guys. I'm not just going to be sitting here in the desk. Sometimes I talk to you guys while I'm driving. You know, I have the thing set up there. My wife's driving. I'm talking to you like that on the phone. Sometimes I'm on the go. Sometimes, hell, I might even be having lunch, whatever the case may be. We're buddies. We're getting to know each other. But I'm helping you out. Just tell me what's going on with your fucking portfolio. I can help you. Don't worry about what I got going on. You know what I mean? Because your shit's a lot easier to deal with than mine, just straight up. So anyway, I appreciate each and every one of you guys. I got to go. TJ the Wheel Deal signing off as always. May your sky stay blue, stock stream. Peace out. God bless you guys.